Welcome back to Zalwora. Today, we are not just doing a market update, we are doing a masterclass. We are going to take apart the entire precious metals market, from the mines deep underground to the manipulated paper contracts on Wall Street, and put it back together so you can see the real picture. If you are holding gold, silver, platinum, or looking at copper, this video is your roadmap for the next few years. Here is exactly what we are going to discuss today. 1. The dead decade lesson. We will look at the gold chart from 2011 to 2020 to understand why prices sometimes go flat for 10 years and why that boring phase is actually the most dangerous trap for impatient investors. 2. The what if scenario, risks. Everyone on YouTube talks about prices going to the moon. Today, we will ask the hard questions. What happens if they crash? What if an industrial recession drags silver and copper down? We will look at the bear case. 3. The forgotten giants, silver and platinum. While gold gets the headlines, we will reveal why silver and platinum might be the true wealth creators of 2028. We'll break down the ratio trade that makes them historically cheap right now. 4. The industrial crystal ball, AI, solar, and hydrogen. We will predict exactly how the AI boom, the solar explosion, and the hydrogen economy will consume the world's metal supply by 2030. This isn't just about money, it's about physics. 5. The availability myth. Is there plenty of metal left in the ground? We'll expose the truth about ore grades, why we are digging deeper for less metal, and what that means for your portfolio. 6. The rigged game, paper versus physical. We will discuss the paper market manipulation, how big banks use paper contracts to suppress prices, and the specific catalyst that could finally break their control. 7. The practical guide, how and what to buy. I will show you exactly how to execute these trades. We will compare ETFs like GLD and SLV versus mining stocks like COPX versus physical bars. Plus, I'll share the specific platforms IBKR and Sarwa to use. 8. The Zalwora exit strategy. Finally, the most important question, when do we sell? I will share my personal strategy for rotating out of metals and into real estate or cash flowing assets using ratio flips instead of dollar prices. But before we dive into this deep dive, here is the disclaimer. I am a researcher, an analyst, and a content creator. I am not your financial advisor. Markets are dangerous. They are volatile. What we discuss today is based on historical data and industrial projections. But history doesn't always repeat, and projections can be wrong. Never invest money you need for rent or food into metals. Metals are for wealth preservation, not for paying next month's bills. Do your own research. Take responsibility for your own future. Now, let's look at the charts. I want you to look at this chart closely. This is gold on TradingView. See that peak? That was 2011. Gold hit $1,920. Everyone was screaming hyperinflation. Everyone said the dollar was dead. And then, look what happened. For the next 9 years, gold did nothing. Actually, it did worse than nothing. It dropped to $1,050 in 2015. It bored investors to death. From 2013 to 2019, if you held gold, you made zero money. While the stock market, the S&P 500, went to the moon. Why am I showing you this? Because I don't want you to be naive. Gold went flat because the economy didn't collapse. The dollar got strong. Tech stocks boomed. Metals struggle when the regular economy is too good. We are buying metals today because we believe the good times of low inflation are over. But you must respect the chart. Metals require patience, years of it. Let's play devil's advocate. We love silver and copper here at Zalwora. We think they are going to perform. But what if we are wrong? What if silver, platinum, and copper don't follow gold as a safe investment? Here is the risk nobody talks about: the industrial recession. Gold is money. If the world ends, people want gold. But silver and copper are ingredients. They are industrial inputs. If we hit a massive global recession, if factories close, if nobody buys new Teslas, if AI construction stops, the demand for silver and copper collapses. In 2008, during the financial crash, gold fell 30%. But silver fell nearly 60%. Why? Because investors treated it like an industrial commodity, not a precious metal. The risk. If you buy silver expecting safety, you might get volatility instead. If the economy slows down, silver and copper will hurt more than gold. You are paid for taking this risk. That's why the potential profits are higher. Look at this silver chart. It's messy. Gold is a smooth hill. Silver is a jagged mountain range. When silver moves, it moves fast. In 2020, it crashed to $12, then shot to $30 in 5 months. In 2026, we saw it touch $95. This chart tells you one thing: timing matters. You cannot buy and forget silver the way you do with gold. You have to watch the industrial cycles. It looks cyclical, rising and falling with the global economy. And here is copper. This chart is basically a graph of global GDP. When China builds cities, copper goes up. When the world locks down, copper goes down. Right now, this chart is pointing vertical because of AI. But never forget, copper is not money. Copper is work. And if the world stops working, copper crashes. I get this question in the comments all the time. Zalwora, isn't the earth full of metal? Can't we just dig more? Technically, yes. Economically, no. This is the concept of ore grades. 50 years ago, if you dug up 1 ton of rock, you might find 2% copper in it. Today, you are lucky to find 0.5%. We have picked all the low-hanging fruit. The easy metal is gone. To get more copper and platinum now, we have to dig deeper, use more energy, and spend billions of dollars. So yes, the metal is there, but it is trapped 2 kilometers underground in the Andes Mountains or in politically unstable regions of Africa. The availability is theoretical. The accessible supply is shrinking. That is why prices must go up, to pay for the massive cost of getting the difficult metal out of the ground. Before we talk about the future, we have to talk about the rigged game. I know, it sounds like a conspiracy theory. But in the metals market, it is a documented fact. We have seen major banks like JP Morgan pay nearly $1 billion in fines for spoofing precious metals markets. Here is how it works. The price of gold you see on your phone is not the price of a physical bar. It is the price of a futures contract, a paper promise. For every 1 ounce of real physical gold in the COMEX vaults, there are often 100 to 300 ounces of paper gold traded. Why does this matter to you? Because this paper market suppresses the price. It acts like a beach ball held underwater. The banks can sell unlimited paper gold to keep the price down. But, and this is the big but, this only works as long as investors are happy with paper. The moment big players like India, China, or Russia stand up for delivery and say, I don't want the cash, I want the metal, the scam breaks. The beach ball shoots out of the water. We believe we are getting close to that breaking point. When the paper short breaks, the price discovery will be violent. So, where is this all going? Let's look at my predictions for 2030. Silver, the solar standard. By 2030, solar technology will likely change, but it will still need silver. New TOPCon solar panels use 50% more silver than the old ones. Even if the price of silver goes to $200, solar companies will pay it. Why? Because silver is a tiny cost of the total panel, but it's essential for efficiency. Opportunity. Silver isn't just a trade, it's a bet on the sun. Copper, the AI nervous system. Data centers are the factories of the future. A normal house uses a little copper wire. An AI data center uses mountains of it. Cooling systems, power grids, chips. I predict copper will become a national security asset. Governments will stockpile it like oil. Opportunity. Copper miners, the companies digging it up, will become the new oil giants. 3. Platinum, the hydrogen economy. Batteries, lithium, are great for cars, but they are terrible for ships and trucks. They are too heavy. The future of heavy transport is hydrogen, and hydrogen engines need platinum. As the world realizes batteries can't save us alone, platinum will have its second life. Let's talk about your brain. Investing in Apple or Tesla is fun. You get to tell your friends at parties. Investing in silver and platinum is lonely. You will go through three phases. Phase 1, the honeymoon. You buy your first bar. It feels heavy. You feel like a pirate. You check the price every day. Phase 2, the boredom. The price drops. Then it goes sideways for 6 months. Your friends are making money in crypto or AI stocks. You feel stupid. You think about selling. Stop. This is where the money is made. The weak hands sell here. The strong hands accumulate. Phase 3, the mania. Suddenly the price spikes. Everyone on YouTube is talking about silver. Your taxi driver is talking about gold. This is when you feel like a genius. But this is actually the most dangerous time. This is when you should be thinking about selling, not buying more. Which brings us to the most important chapter of this entire video. Nobody talks about this. Zalwora, when do I sell? If you believe the dollar is dying, you might say never. But you can't eat gold. You can't live inside a silver bar. Eventually, you want to convert that wealth into a better lifestyle. Here is my Zalwora exit strategy. It's not based on price, it's based on value. 1. The gold to real estate ratio. Historically, there are times when it takes hundreds of ounces of gold to buy a house. But in a true metal bull market, that ratio collapses. In 1980, you could buy a decent house in the US for just a few hundred ounces of gold. My plan. I am not selling my gold for cash. I am waiting until gold is expensive and real estate is cheap. Then I flip the metal directly into property. I trade one hard asset for another. 2. The gold to silver ratio flip. If the gold to silver ratio drops from 80 down to 30, meaning silver gets expensive, I will swap my silver into gold. I use the volatility of silver to acquire more stable gold for free. The golden rule. Never sell your metals for fiat currency unless you have an immediate expense. Sell them only to buy a cash flowing asset like a business, a rental property, or dividend stocks when those assets are on sale. We are wealth preservers. We don't cash out, we rotate. We've talked about history. We've talked about the future. Now, let's talk about Monday morning. You have cash in your bank account. You want exposure to metals. How do you actually press the button? First, you need the right tools. You can't buy these at the grocery store. For my viewers, especially those in the UAE and the Middle East, I recommend two main platforms depending on your experience level. Interactive Brokers, IBKR. This is for the serious investor. It gives you access to the entire global market, US stocks, London metals, everything. It's professional grade. Sarwa. If you want something simpler, cleaner, and beginner friendly, Sarwa is a fantastic option to get started with ETFs. Once your account is open, you will see a search bar. What do you type in? It depends on what you want to own. Do you want the metal itself, or do you want the business digging it up? Let's break it down by metal. Get your pen ready. 1. Gold, the safety trade. If you want the price of gold without storing bars in your house, you look for liquid ETFs. GLD, Spider Gold Shares. This is the big daddy. It is the largest, most liquid gold ETF in the world. Big institutions use this. It's easy to buy and sell instantly. IAU, iShares Gold Trust. Very similar to GLD, but often has a slightly lower expense ratio. Great for holding long term. SGOL, Abadan Physical Gold. This one is interesting. It is backed by physical gold bars in vaults. It's smaller than GLD, but very trusted. 2. Silver, the volatility trade. Remember, silver moves fast. You need liquidity. SLV, iShares Silver Trust. This is the standard. Massive volume. When silver moves, SLV moves. If you are trading the price swings, this is your vehicle. SIVR, ABRDN Physical Silver. Like SGOL, but for silver, physically backed. A solid choice for the buy and hold crowd. SILJ, Amplify Junior Silver Miners. Listen to me carefully. This is not the metal. This is a basket of small mining companies. If silver goes up 10%, these small companies might go up 20%, or they might crash if they run out of money. This is for the aggressive part of your portfolio. 3. Copper, the industrial play. Copper is harder to buy. You can't really store copper bars. They are too cheap and heavy. So we use ETFs, COPX, Global X Copper Miners. This is my favorite way to play the trend. You aren't buying copper, you are buying the giants, the biggest copper mining companies in the world. If the world needs copper, these guys get paid. CPER, United States Copper Index. This tracks the futures price of copper. It gives you a direct view of the price direction, but it involves futures contracts, so it can be tricky. Good for trading, maybe less for holding forever. ICOP, iShares Copper and Metals. A newer, smaller option. It gives you diversified exposure to miners if you want an alternative to COPX. So, here is the cheat sheet. For safety, buy GLD or IAU. For growth, buy SLV or COPX. For speculation, buy SILJ. And remember, all of these can be bought right now on IBKR or Sarwa. Don't let analysis paralysis stop you. Pick your platform, click the link in the description, and buy your first share. You aren't just spending money, you are buying a piece of the global infrastructure. We have covered a marathon today. We looked at the lost decade of gold. We analyzed the industrial explosion of silver and copper. We talked about the rigged paper markets, the premiums, the taxes, and the psychology that will try to shake you out of your position. I want you to save this video, download it, put it in a playlist. Because 6 months from now, when silver drops 10% in a day, or when gold goes sideways, you are going to need to watch this again. You are going to need a reminder of why you started. You are not here for a quick buck. You are here because you see the debt, you see the inflation, you see the energy transition. You are here because you are becoming your own central bank. This is Zalwora. If you made it to the end of this long video, comment diamond hands below so I know who the real investors are. Subscribe, share this with a friend who needs a wake-up call, and I will see you on the other side of the wealth transfer. Thanks for watching.